too. 10 million extra barrels of gas in storage. How about this one? The world is on fire. North Korea says it tested a hydrogen bomb. Saudi Arabia and Iran, tensions are rising. There's an understatement. Violence in Germany. Migrants abusing women in the street. And more weakness in China's economy. Look who is here. Market watcher Jeff Sica. You, sir, have been right. You have correctly predicted what's going on in the market right now. But let's talk about today. World is on fire. Is that really a factor in today's stock market drop here?
Of course, because here's what you have. You have the aggregate of all these geopolitical issues. You have a Fed that is no longer the drug that keeps this market going. And you combine everything together and you have a very, very serious day of reckoning upon us. So investors have to really look at not only these isolated incidents, but they have to look at everything converging at once.
See,
what's that going to mean?
To me, I wake up this morning, I see the headlines, and to me, this is anxiety. I mean, this is real nervous, nail-biting time because it's all coming together at one time.
Right.
Tell me about Apple. They're down on reports that they may cut production of the iPhone up to 30%. That's all about China, isn't it?
Yeah, I mean, keep in mind, China was put on this pedestal. China was going to drive growth in technology. It was going to drive growth across the board. Now what we're seeing, which we really saw indications of a year, 2 years ago, is an extreme slowdown. If Apple does not have China to support its growth, Apple is not growing, Apple is contracting. That is a very, very negative position for Apple to be in.
Do you think this market continues to fall?
I think the market's going to fall. I think you're going to have a heck of a lot of volatility. And the reason you're going to have volatility is because when the traders get a hold of a market that moves like this, they take advantage of the big ups and downs. But keep in mind, anything that we have on the horizon, if you look back, it was always the Fed that bailed out the market when it was falling. They always came out and said they have tools, there's no asset bubbles. Now all of a sudden you're hearing these whispers of asset bubbles. The problem is when you remove that safety net, when you withdraw that safety net, you're ultimately going to have a very ugly end to it all.
Do you think that they'll reverse course and say, okay, we did you a one-off shot of raising rates in December, we're going to rescind it?
Of course they
do that?
Of course. You know what?
You think they are going to do that?
That was their plan all along because they realized they were out of weapons, they were out of options, they had no safety net. So the only thing they could do is take back what they already gave, which was the interest rate hike. So you will probably hear that talk very soon.
Jeff Sica, now that is quite a prediction, because if they backed away from the rate increase of last month, people would say they don't know what they're doing. They're lost.
They hated doing it. They hated doing this rate increase because they knew that created this monster. They knew that the market was addicted to them. They knew that the market was addicted to low interest rates, and they knew that asset prices were distorted. They just didn't know the extent they were distorted.
Question. Did Jeff Sica just move the market? When we started talking 2.5 minutes ago, the Dow was down 205 points. You said that about the Fed, and now it's down 182. See what you did? What a guy.
Oh, listen,
what a guy.
The market has to thank me.
Yes, thank you once in a while. Jeff Sica, everyone, he will be back. Thank you very much indeed, sir.
Thank you.